a vehicle which was based out of India, within India, in the state of Gujarat and outskirts of Ahmedabad city. So this is the SEZ, where primarily it has been built to popularize the various financial services opportunity within India. Also, Indians can look at this vehicle to invest outside India. So it's trying to serve both the purposes. Investors outside India, foreign NRIs or FIIs, they want to come into India, or resident Indians who want to invest in assets which are outside India. So for both kind of service providers, this was a good vehicle to be on and cater to both of these audiences. Now, primarily prior to Gift City, typically the money used to flow in from Mauritius, or it used to flow in from Luxembourg, Ireland, Singapore. These were some of the Bermuda, these were some of the destinations from where the money used to come in. Today, we need not go to all of these jurisdictions and get into all kind of complications in terms of compliances. I think in most of these jurisdictions, the amount of investment is also very, very high. Now, for those investors, I think this is a very plain vanilla, simple structure which has been created, popularly called as Gift City Gujarat in Gujarat Infrastructure Finance Corporation. So that's the hopeful terminology. So for all practical purposes, in this audience, I think it's a offshore location within India. To promote this structure, the government has given a lot of flexibility, a lot of operational ease, tax advantages, so reduce the operation cost, uh, give tax holidays, give tax efficiencies, and allow Indian firms or global firms to come and participate on the Gift City platform to cater to both side of investors. One is the resident Indians you wanting to use the LRS limit and move outside, or for foreign investors, including NRIs, who want to come and participate into India. Like I said, you can open a bank account in Gift City. You have all the top banks which are operating in Gift City. You can open a brokerage account. You can open a mutual fund account. I mean, most of these things are still mutual funds and all, still some time to go. But AIFs in more particular, you can participate, and across various asset classes. So long only equity, private equity, long short funds. So all of these platforms are now available, and of course the beauty is that you can invest through your dollar account. So what I understand more from NRI perspective is that NRIs have their NRE accounts and NRO account, where they have rupees lying, and then they use that account to invest in Indian products. Now they can also use their dollar account, money which they do not want to transfer or remit to NRE, NRO. They can retain that in dollars and bring that money into India through the Gift City platform. All kind of flexibilities or leniency on compliances are given, so one need not submit a PAN card or all of those things to really invest into India now via Gift City. So compliances are much more easy. Operational efficiencies are very, very high. Tax efficiencies are pretty attractive, and it's a very simple route. Now that we have launched one fund, the onboarding and execution of client transactions is pretty seamless, pretty easy, because we run a fund in Mauritius. Honestly, last 8 years, we've not been able to really scale up the Mauritian fund because of this operational hassles, and all kind of FATCA compliances come in sometime, and a lot of complications in terms of compliances. So in 8 years, we could reach just about $30 million of AUM. In Gift City, in 2 months, we have reached 30 million. I think by the end of December, we should be more like $100 million. That's the kind of response we are getting. One clear benefit I can tell you for our NRI friends here is that in any jurisdiction outside of Gift City, if you come into any FPI vehicle where the money is coming into India, there is a restriction of NRI's investment up to the extent of 49%. Right. So if a fund is, let's say, $100, no more than $49 can come from NRIs. The moment that limit is breached, we cannot take any incremental money from the NRI. So the non-Gift City vehicles are more to promote actual foreigners who have no connection with India, Indian origin, OCI card, PIO card, all of those things. Everything gets culminated into the calculation of the NRI limit. That has been relaxed. in GIFT City. So honestly, I launched the fund in GIFT the moment that that rule was relaxed by SEBI. Within a week time we launched it, because then we could figure out that now there is no there is longevity of the product. Compliances will not come in the way that I have to stop the fund or restrict the flows of our NRI friends, and that gave us a lot of confidence that now we are in the game. You know, so this is all about the thought process behind the GIFT City. It's still early days. I think from banking perspective, from custody, from operational, I think that all is pretty well set up now. In terms of asset managers, you still have a few asset management companies which have launched their products, but I feel in the next 3 years and 5 years, there's going to be a stiff competition, and there's going to be a lot of choices available to NRIs and FIIs in terms of ways and means of participating into India.
So basically, you are saying that essentially there are broadly two categories: inward and outward. And inward is like somebody who's invest, like they're residing outside of India and wish to participate in Indian capital markets. The other one is like, for example, they are Indians, but they wish to invest outside of India. So
Yes.
okay, okay. So as of now,
Yes.
Motilal Oswal has AMC. AMC has only one AIF, which is investing in
In
inside.
India, into
In
India. Now there are, I mean, we can go deep into conversations. There are, there are within when you create a fund, there are two options. You can get your an AMC can register itself as an institution player, or it can get registered as a retail player. Now, when you like, we are in the institution category right now, so the minimum investment is $150,000. But you can also register at some stage. We may contemplate to register as a retail asset management company, and then we can take investments into lower denominations of $5,000, $10,000 also. So all of those things are also now there as a process. We just have to figure out when is the right time to migrate from institution to retail, and then try to take mass investments from outside of India. So all these things are also available. Maybe what I'll do very quickly in 3 or 4 minutes, whatever I've spoken, I'll just
sure,
show you on the chart, so it's pretty
please.
easy for people to really understand. So, like I told you, Gujarat International Finance Tech City. So, this is what is the nomenclature. GIFT, basically a multi-service special economic zone, which has been notified as India's maiden international finance service center. So, for those of our friends who are in Dubai, it's very similar to what is there, like what you call there over there, DIFC, right? So, within the main city,
Right.
mainland, you have a DIFC where you can bring in. I mean, foreign companies can set up over there, sell their products, to through the registered intermediaries to all the residents. Again, there is only one regulator. You don't have multiple regulators. So IFCA is regulating all kind of businesses, right from a banker to a broker to a asset manager. So one regulator obviously gives that much more flexibility for us to really get approvals much faster. I told you that many businesses like banking, offshore asset management, financial transactions, capital market, all of these are now available on the GIFT City. And over a period of time, you will find a lot of players actually operating, and you will have plenty of choice to choose the player of your this thing. So basically, the goal is to create a welcoming place, more India-centric, for people who are basically into Mauritius, Dubai, Singapore. It's a free trade zone, offers a lot of tax incentives, flow of finance, financial product services. So these are some of the basic features of why GIFT City got created. Now, some of the benefits are, of course, like I said, lower, much, much, much lower operating costs. Believe me, operating a fund in Mauritius easily takes away 40 to 50 basis point over and above the management fees. And that 40 to 50 basis point is also loaded on to the fund, and eventually it is paid by the investor. Here we have capped our operating expenses at 15 basis point. So one clear cost advantage is this leakage of 40 basis point, which is unnecessarily getting spent in Mauritius. So that is extra 40 basis point incremental return to all our investors. The tax regime is pretty competent. So whether you come through Mauritius, or you come through GIFT, or you come through any other jurisdiction, the basic nature of long term, short term doesn't change. In fact, as we speak, I'll talk to you about it. But there is a special category which is created, that if there is a fund which is going to invest into Indian mutual funds, right? That kind of a feeder structure will be exempted from any kind of tax. Now, that's the second fund we will be launching in less than a quarter from now, where we will take money and then deploy that into our own mutual funds and make it diversified across large cap, mid cap, small cap. So we'll get much larger diversification, but any redemptions from that fund will not attract any tax. So all the gains will then be subject to the home country tax. Now, in case of Middle East, the taxation regime is zero to very low. So it actually becomes a great product for our NRIs in terms of the post-tax returns, right? I spoke about the engagement with the financial regulator fairly easy, and all of these relaxations which are on the 49% has been given, right? Then on the compliance side, NRIs are exempt from obtaining PAN and filing returns of income in India. These are very similar, so a category 3 AIF, the fund we have currently launched, all the capital gains are paid by the fund. So any redemption which is then paid out to you is actually tax paid. You don't have to pay any incremental taxes in India. So whatever long term, short term, everything is at the fund level. While at the end it is borne in the by the investor through the NAV, but at least there are no compliances for NRIs to really file these returns or pay the taxes separately, etc., which happens in a portfolio management service, right? Uh, yeah, these are some of the basic data. And this we'll discuss later on through the conversation. I think this is more the operational process of how you come into India. So, like I said, it's very, very simple. It's just that you can come into Indian products, and instead of investing through rupee, you just simply swap it with dollars and get your dollar account also to benefit from participating into Indian assets.
Yeah. What, Akhil, I was speaking with somebody and he told me, he asked me one simple question: what is the size of your economy? I said it's about $3.75 trillion. He said the similar amount of same size of money, NRIs who have gone abroad, the same size of money exists there. I mean, they've earned that money, that their net worth is about $3.75 trillion.
Absolutely, absolutely, absolutely.
Most of them are equally keen to participate through
And
these.
we don't have even a percent of that coming out here into India.
Yeah, yeah, that's the kind of potential it has. Now, coming back to this particular structure, Akhil, uh, what about these NRIs have this fear in their mind that historically, when you look at INR versus dollar,
Yeah,
it continues to depreciate, and they wish to keep their money in dollar term only all the time.
yeah.
So can you talk to us about through this fund how it is beneficial? You take money in dollar, you return money in dollar term, but
Yeah.
while investing, you convert that into rupees. So do you have a risk out there? Over to you.
No, so this is the most relevant question and the most important and the most pertinent question. I've been going to promote our Mauritian fund, India dedicated fund for over a decade now. I think the everything was good, but the basic objection was that the rupee keeps depreciating, so therefore the dollar returns actually look pretty small. Now, yes, there was a time where India was, you go back 30 years, we were fragile five. India was very different 20 years back, and India is very, very different in the last 10 years, right? And especially post COVID, what we have seen is not getting into greater detail, but with the way the reforms have happened in the country and with the way our economic growth has happened, and with the way our financial regulator, the Reserve Bank of India, has really built an infrastructure where managed our reserves very well. In fact, in the last 15 years, our reserves have grown from under $100 billion to now closing to $700 billion, right? Our For the last three budgets, I think the government has put a lot of focus on fiscal consolidation. So therefore, we are very, very conscious of bringing our fiscal deficit down. The other thing you have to see is that India as an export market has become fairly sizable now. So 20 years back, just about IT sector was largely dominating any foreign currency remittance or dollar remittance through the large IT companies giving software services in US, etc., and bringing the foreign here, which used to be like more like $250 billion or so. Now you see incrementally last year we have done exports of $750 billion. So IT is broadly 50% of the export, and the other 50% is coming from the merchandise companies like electronics, automobile, defense, and a lot of other things what we are exporting. So we
iPhone.
are, yeah, iPhones, etc. So I think the policy is clearly make in India, and with the way the geopolitical issues are now panning out with the whole China plus one, India becoming one of the destination for the supply chain to move outside China and come into India. A greater focus on defense, which was a very large import item, substituting oil with alternate renewable fuel. So we import less of oil. Therefore, that was one real big risk which used to disturb our inflation and our currency also. And the third is all the electronic goods which were getting imported. There were three large import items: oil, electronics, and defense. All of these three areas we are working to make us more self-reliant. So electronic, that now the iPhones are getting manufactured here, and we're looking at $60 billion of export of iPhones in the next 3 years' time. Samsung and many others will get exported. Automobiles, we are seeing exports happening. Oil, I've spoken about moving to renewable power. And anyways, as long as the oil is below $100, generally is not hurting the economy. Now, all of this has resulted into a current account. The deficit is the latest number for April, May, June is just about $20 billion or something. So the deficit has also come down. So we are basically with from 4.5% current account deficit, we have come down to under 1% current account deficit. So we are losing less dollars. In fact, we are getting more dollars, and that is ensuring. So this $680 billion of reserve and incrementally more exports and less imports. I think this kind of a combination can ensure that in next 5 years our currency reserves itself crosses $1 trillion. Now you see what is happening across the world, what is happening in our neighboring. All these countries are losing out of the dollars, and therefore their rupee, their currency has
Okay.
depreciated like multiple times. But our currency has become, it's the third best performing currency in the last 3 or 4 years. So currency now, I feel if you want to be conservative and if you want to be bearish, I would say that if you take a 15-year average, we were depreciating at 4 or 5%. If you are conservative, you take a depreciation rate of 1.5%. But in medium term, I feel there is also a chance of actually rupee appreciating. You see, only in the capital markets, if the foreign institution investors come back, that itself can bring tons of dollars inside, and we can be current account surplus once again. So the now what I'm hearing from NRIs outside is that fear of currency depreciation is not no longer lingering on their mind. But it's a good question, and I thought long answer to a short question, but important to make people understand that from a macro perspective, I think India is shaped up well, and that definitely gives a lot of stability to the currency, and therefore you can with ease come into India. But yes, the on the fund, when the dollars come inside, it gets converted to the rupee on that day, and on the redemption again. So at the exchange value, dollars are bought and dollars are sold. We are not really hedging the fund or investors.
Okay. So you're not hedging the funds basically.
No, it doesn't make sense actually.
Okay. Okay. So you don't foresee major depreciation
Yeah,
taking place, and
we
therefore
don't we don't estimate a very drastic cut on rupee valuations
but at
unless
the
there's a hell breakthrough.
sure at the fund level, do you have this flexibility? As in, would you ever like to exercise this?
No, I don't think so. We have not applied our minds also out there. I think it has to be a fair mechanism, because how do you hedge at, and it can have a counter effect also. Like I said, in short medium term, we feel we can go to 80 rupees. So who takes that loss? Right. So at this stage, I think we
Plus
we have well
expense.
managed. Yes, plus expenses. So I think it's better to keep it open ended and assume a percent and a half. Net in dollar terms, I think earning a 10-11% is not very difficult in dollar terms.
Sure, sure.
That's very, very conservative, I'm saying.
Yeah. Point taken. No, so we are just talking about at a framework level, the structure level. Of course,
Yeah.
fund manager will take the appropriate call.
Yeah.
Now, I want to go back and double click on the taxation part. Akhil, you touched upon it. You said that, at the fund, the entire taxation is at the fund level. For the benefit of our investor, I would request you to throw some more lights on, for example, somebody living in US or, paying taxes out there. Now, whatever is the capital gain, which is 12.5% long term and 20% short term, is
Yeah.
paid at the fund level. Now,
That's
do
right.
they have to pay the taxes again in their own country?
So, with most countries where we have a double taxation agreement, DTA, with those countries you have to pay the differential of the tax paid in gift city versus what they have to pay in their home country. So, for example, if let's say in UK the taxation on capital gains is about 25 or 30%, I believe. Right now, that's they have only one tax for long term, short term. Now,
Yeah.
if we have paid, let's say on a when you do a redemption, if the total tax paid by the fund is, let's say, 17, 18 or 19% effective tax, and the home country tax is 30%, so you will get your tax certificate of tax paid in this fund, and the differential is what you will have to pay locally, so you will get that adjustment uh,
So
in your home.
operationally, how does it work? Do you issue some kind of letters to the investor? Because at AIF, generally the letters are not been issued because knowing the
Yeah.
fact that in India Cat 3 is exempted. So do
Yeah.
you provide such reports to the investor who is
We,
investing?
we, we do send a breakup of long term, short term on an annual basis just to give an idea. But for US investors, we issue a K1. And K1 means that basically you are trying to break up the gains into short term and long term, which helps them. And then the US investors can file their K1 in their respective states and take the set off against all the taxes already paid in the destination country.
Okay, and you don't have any restrictions as such that US and Canada
In
they
fact,
can't.
we have approvals from US, so we can properly take money from US, Canada. Actually, we can take money cross. I mean, there are some geographies where there are all the FATF countries are what have been grey listed, but apart from that, we can take money from anywhere.
Okay. Can you also talk to us about the fund, your fund, which is there as an offering, and it's a replica of your founder fund, or how does it work?
So we launched a very interesting concept. Let me play the PPT once again for you.
Sure.
Yeah, so this is the name of the fund. Slightly complicated name, but I think incrementally our new names will be much more simple names. So this is the fund. Uh, so this fund is basically following an underlying theme of founders. And as we understand from the word founders, basically this fund is going to look at businesses where the founders are the largest owners of the business. So this fund is basically targeted to invest in the Indian entrepreneurs, and in doing so, what we are not investing in is basically the multinational companies and the public sector enterprises. So these two ownership companies would be eliminated. Although there's a small 20% flexibility we have kept from risk mitigation perspective. If at all we need to take some exposure, we may take. But largely, this fund will invest in businesses which are run by Indian promoters or Indian founders. We innovated this concept early 2023 when we went back to our wealth creation studies done by Ramdev Agrawal. And what we saw very interestingly in the last 25 years, if you see the top 10 fastest growing companies in India, 9 out of 10 companies were promoter owned businesses. If you would have looked at the top 10 net wealth created companies, 5 out of 10 were Indian promoted company or run by Indian promoters. And most consistent companies in terms of price performance, again, 9 out of 10 companies were Indian promoters, right? If you take a blend of all of these three things all round, 10 out of 10 businesses are actually where highest wealth, consistent wealth, and fastest wealth has been created. It has been all Indian owned businesses. Now, all these names are very familiar to you: Kotak, Pidilite, Asian Paints, She Cement, Berger, Sun Pharma, HDFC, Bajaj, Dabur, Eicher, all spectacular promoters, spectacular businesses, well managed businesses, and therefore they have created this kind of compounding, which is all 100 bagger stocks, 100 bagger, 200 bagger stocks, what you can see out here. So we said that, I mean, if India has produced so many so many multi-baggers, run by entrepreneurs over the last 25 years. India story has just started. So what could happen actually in the next 25 years? Anyway, we are talking about Amrit Kal for our country, where in next 25 years we will be 100 years. At the rate what we are growing, at the rate the entrepreneurs are getting created in India, I think these names will change, but we will still see that the promoter-owned businesses will create fastest, biggest, and most consistent wealth. So we thought that okay, let's create a fund which basically focuses on this segment, and then we created this funnel. Okay, so we take how do we create this fund? We took the top 500 stocks between 5,000 crores and 11 lakh crores of market cap. These numbers have also now changed with the way the markets have gone up. We put the first filter, which is any company with minimum 26% promoter holding qualifies. Now, within the promoter ownership, we have done a small differentiation. We are saying that we will take the senior management, the CXO level ESOPs in computing the 26% promoter stake, because in the new businesses in India, especially in the digital sector, IT sector, financial sector, and many other new age businesses, most promoters are giving away their stakes to employees and getting them also to have skin in the game, and everybody works like promoters for the betterment of the shareholders. So I think that's a very interesting twist we did, and that helped us get sectors like financials and IT and digital, which otherwise would have been eliminated, because most businesses in these sectors are lower on the promoters and higher on the institutions and the foreign institutions. So that gives me a universe of about 200 300 names. Then we say that company has to be profitable, and we've kept 100 crores minimum PBT, which gives me another creates a filter of 260 to 280 businesses. We need high quality businesses, therefore companies which are not leveraged and producing a better return on capital, excess of 15%. That gives me 150 to 170 businesses. We do a governance check on through the QGLP framework, and then finally, at what rate can the company grow? So we need businesses to grow at least 3% more than the benchmark earnings growth, and that gives me a final portfolio of 20 to 30 names. So this is the funnel, how we create a 30 stock portfolio from 500 stock universe, essentially focusing on promoters, quality promoters, growth oriented promoters, and try and buy it at a reasonable price. So that's the formula. This is why we did the fund. And see, this is again on a macro level very interesting. Why these businesses produce so much of wealth is because these businesses, you see just a 10-year data, the revenue growth of, if you see, the black bars are the promoter driven companies, the orange bars are MNCs, and the gray bars are PSU. Three kind of ownerships we have: private sector, public sector, and multinational. Now the revenue growth has been higher than the other two, operating profit has been higher than other two, and the PAT growth also has been higher than the other two, right? So therefore, if those businesses which do better revenue, better profit after tax, obviously we'll see better wealth creation over a longer period of time. So this is what basically justifies why we did this strategy, or why we innovated this strategy. Now, how does this strategy look like? You will not find the names what I showed you, which was reflecting in the last 25 years. Now, we feel that within India for the next couple of years, these are some of the themes where a lot of money is going to be made. So we have first fleshed out which are the high growth opportunities. Where can I get businesses which can multiply their profits over 3 years and 5 years? And what we could figure out, we touched briefly, was China plus one, the value chain moving into India. Chemicals is one large space. Electronic contract manufacturing services businesses is the second space. In the manufacturing, which is a large focus of the government, almost 11 to 12 trillion rupees yearly getting spent to build the India's infrastructure, roads, ports, bridges, metros, highways. So this is one part we are looking at, where we have autos, auto banks, power, etc. Financialization, you could participate through banks. We feel banks could be slightly tepid growth for some time. More focus on NBFCs, where we find the growth is much higher. On the tech side, we are looking at new age tech businesses like Zomato, Paytm, IBM, Nykaa, and more to follow, and some of the other mid-size high-tech companies. So we are actually under allocated to large IT companies, but over allocated to mid-size India-focused tech companies. On the consumption side, we said that the high end of consumer discretionary looks good. So FMCG is zero weight and high end consumer is overweight. Telecom was again an important, very latest entry 6 months back. What we have seen now, there are going to be three players in telecom. You have Bharti, Vodafone, and Jio. The cartelization is, or not the word cartelization, but the price war thing is now broadly over. All companies have increased their tariffs and likely to increase further tariffs in the next year or so. So this sector, which has been into a trouble zone for last 15 years, now you see the quarterly profits of Jio and Bharti or expecting Vodafone to go into profit is highly likely, and we've seen how the stocks have done. And within the healthcare, we are basically participating into hospitals over pharmaceuticals. Now, these are some of the high growth themes, and basis this, this is how the portfolio looks like. So on the power, we have the wind power companies called Inox and Suzlon. In the high-end urban, we have jewelry businesses, malls businesses, garments businesses, real estate, and the beverages businesses. On the tech side, see eMudra now, it's a very differentiated tech business. It's not like you're buying Infosys and TCS. It's a consumer business with a tech capability giving you full compliances, your digital signatures, e-stamping, and all of those things. And then we have Zomato, which is a new age businesses. China Plus One is now the chemical businesses, and in the NBFCs you can find a bunch of NBFCs, small size banks, capital market businesses into stock markets, etc. And this is the entire Make in India, where you have industrials, beneficiaries of PLI and EMS, and that's the healthcare for you. So it's a fairly diversified portfolio, but a very differentiated portfolio from some of our other competitive friends. So it gives you it gives you a lot of differentiation in your portfolio. Follows the high quality, high growth theme. Over emphasizes on investing on Indian entrepreneurs. And therefore, the outcome of this portfolio has been, this is now in USD terms, for my model life portfolio, which is now close to 18 months old. So in dollar terms, this portfolio 18 months return is 63%. This is dollar terms versus 43. My 1 year is 58 versus 36.5, 25
Wow.
versus 18, 16 versus 12, 5 versus 4. So across time frames from 1 month to 18 months, it's been a very strong performer. And now the total size is about 600 million, actually, closing to 600 million dollars. And the Gift City is also is contributing now. 30 million out of this is Gift City, and I have a pipeline of another 20 million at least in the next month or two. So this is basically the product opportunity. These are the share classes, etc. Right? So yeah. So because that basically.
Amazing performance, Akhil, by the way. So, as an NRI, people don't expect this kind of returns. And, I was just looking at the data. Last 20 years, India is ranked number one in terms of delivering the highest CAGR returns. And last 10 years is US number one, and India being the number two. And
Right.
with this kind of additional alpha coming from the fund house, you know, this can only add up to more and more performance. I mean, what do you say? These kind of returns are difficult to digest, 63% in dollar term.
No, absolutely. I think India has been phenomenal. I think, especially over the last 4 years. And I think for the audience here, one has to understand that, you know, a lot has changed fundamentally. The whole vicious cycle where we had a period of companies going through bad loans, we had the economy which was slowing down, we had a GST implementation, we had a demonetization, and whole bunch of things which were really dragging us down. But a lot of these reforms have actually started to add value in the last 4 years. So now GST is broadly doing 2 lakh crores, almost 25-30 billion dollars of monthly collections. Your demonetization has kick-started the whole digital India, what we call. Everything is digital out here. In fact, we are more digital than the capital of digital market, which is US. So you can just come here and you don't need a wallet to move around. You don't need any damn thing. You don't need a physical driving license to show as a ID proof or anything. Everything is there in a DigiLocker, a Digi payment, and everything, right? So it's a world-class infrastructure on tech And then that actually kickstarted post demon, and more the velocity we saw was around the COVID time, where everything became digital, right? So that's the other thing. Your Real Estate Regulation Act now cleaned up the complete real estate sector. You have the best of the best builders committing to you your flat, or you get your money back, or you see the cleanup of the banking system. Now banks are flushed with liquidity. In fact, they're searching for borrowers where to lend money. That is becoming more of a challenge. So all these reforms have once again pushed our economy back to 7%, making us the fastest growing economy for third year, and this will be the fourth year in a row, leading to doubling of economy from 2.5 to 3.8 trillion dollars today. And we all know that we are looking at $8 trillion by 2030, and we become the third largest economy. The $650 billion of reserve going to $1 trillion, and manufacturing from 15%. I mean, I can go on and on, because to give you that that this 63% and all is fine, but this is just the start. And I feel that in the next 5 years, India is clearly. I mean, you look at the market cap to GDP today. I mean, we are on a, let's say, round off to 4 trillion economy and a $5.2 trillion of market cap. So if our economy is 8 trillion, the market cap typically should be 10 to 12 trillion, right? So I can see a doubling opportunity even in dollar terms from here. So one has to see that in the world, if they have to allocate for equity, which is the market? Is it China? Is it Russia? Is it US? Probably yes. Is it Europe? Is it Japan? Is it India? Where else will you go for your equity basket?
So from emerging as well as the developed also, when you look at and compare, India
Yeah,
has a very strong point.
yeah. So if I have to put my money, I'll put maybe 30% to US, 70 to India straight away.
That's true. No, great, Akhil. Now we'll take a couple of questions if you're okay.
Yeah, sure.
Okay, so one of the investors has joined us, Ravi ji, and he has recently invested in our fund. Now his question is that generally you follow financial years, calendar, and they follow calendar year. Now, how does the taxation work here? Because from what period to what period you will be providing these numbers, audited numbers?
It can be called, I mean, if you have a December year, so we pay taxes on a quarterly basis. So we pay advance taxes for quarter. We compute post-tax NAVs every month. So we know what is my realized, unrealized gain position, and we keep a provision of our long-term, short-term, and accordingly we declare. So the statement what you will get every month-end statement, you will see two figures. You will see pre-tax, you will see post-tax. So you'll have some idea what is your pre-tax, post-tax return. Post December, when you have to do your filings, you can let us know. We will give you the tax statement or tax clarification, whatever you need at that point of time. And it doesn't matter, because as I said, we are paying quarterly taxes, so we have our books ready and cleaned from that perspective.
Yeah. How does the taxation work for Germany?
For us, it doesn't matter whether it is Germany or UK. The taxation in India for this particular fund, if I buy a stock and sell it less than 1 year, I have to pay 20% plus plus. And if I buy a stock and sell after 1 year in the fund, so fund is a legal entity. It's like a one entity. The income tax is looking at this entity as an individual investor. Now, in this
As
fund
a tax
capacity,
paying entity.
yeah. So in this entities, in this entity, if there is a short-term gain, so if a stock has been bought, sold less than 1 year, 20%, more than 1 year, 12.5% plus plus, right? So that is the tax. Now, in Germany, maybe the capital gain tax might be higher or lower. That way you can take your rebate, or you have to pay the excess tax.
Yeah, that I can discuss with him
Yes.
offline. Okay, how does it work? You have a lock-in here, or one can redeem, and when somebody is redeeming, how much time does it take for you to give the money back to them?
So this is an open-ended fund. You can withdraw once in a month. So last day of the month, as I said, that is the day we compute the taxes and post-tax NAV. So basis that, it usually because it's an international transaction, usually takes I think about 10 days or so. I think that kind of a horizon you should keep
That
in mind before, yeah. But
and
it's open-ended. It's not a lock-in fund.
it's an open-ended fund. Okay. And the other thing is, how much time do you take to uh, deploy the money? Like, suppose you remit the funds and you get the funds, suppose same day?
mutual fund. So today once your documents are clear and the money has hit us, you get the same day NAV. Sorry, in this case, we are doing a weekly NAV. So every Monday we are allotting NAV. So it's a NAV. Uh, that day, whatever the valuation of the portfolio, you get the NAV. In the underlying portfolio, I may have some cash built in, all that stuff, so that you did not get into. You will buy that day's valuation of the portfolio.
As an investor, do I, okay, next question. As an investor, do I get the facility of STP? Let's say I want to deploy over a period of through 3 months.
It's not available, unfortunately.
Okay. So basically, you'll have to take a long-term call and then deploy
Yeah,
the.
you start with 150, 200,000, whatever you want to start, and then you have to manually, once your folio is created, you can manually keep transferring funds and do a SIP. But as of now, we don't have the facility of doing a SIP registration, or I don't have a liquid fund or where I have to move from one fund to other. It's not possible.
Yeah. So, but one can do top-ups, right, Akhil?
Anytime, anytime.
Okay. Okay. I understood. All right. So with that, we'd like to conclude the session here. It was wonderful reading your mind and understood the whole concept, how it is conceptualized, the more about Gift City, and then also talked about your fund. So thank you so much, Akhil, for taking the
Thank
time
you.
out.
Thank you. I think we are very excited to offer this product to all our friends from outside India. I mean, I was in Dubai last week, and there were some 300 audience. I've never got such kind of audience in the past because of this whole rupee depreciation issue. But there were 300 people actually standing, and I just told them that I have not come here for your NRE money. I've come for your dollar money. So I need the dollars. We need these dollars coming into India as soon as possible. I think India is offering a great opportunity. I hope all of you can participate from there. Thank you, Vikas, for doing good work in this area.
Thank you, Akhil. We have taken the initiative at AIF and PMS Experts India to reach out to as many NRIs investors as possible and educate them. And that's the reason we are doing this webinar.
We need people like you. We need
Yeah,
people like you to do this work.
right. So because we feel that this piece will become very large. What is your sense, Akhil, as far as the Gift City size is concerned?
I think in 3 years or maybe less than, maybe I'm a little conservative, but in less than 3 years, this should be $1 billion fund. Or this whole opportunity can be multi-billion dollar opportunity. I
Yeah,
mean, across multiple pairs. It's still
yeah.
early days, initial days. It takes time to settle. You, me, we are all trying to create awareness about the gift city and all the benefits, etc. So it takes some time to popularize the vehicle. Once it is done, I think and people will experience it will become very big. Yeah.
And what about foreign citizenship? Like, for example, somebody is US having green card, US citizen, so they can also
Anybody,
participate.
anybody, Kala ho, Gora ho, Indian ho, nahi ho, Indian origin, no, anybody, everybody will, except for the FATF countries.
So that you
Because
have a list.
हाँ वो list है तो that countries we are not able to take.
Okay. I was speaking with one of the stockbrokers, his name is Kishore Pai. So he said, पहले हम जाते थे यूएस तो हमें बोलते थे अरे ये पैसा मांगने आ गए ऐसे नहीं अभी बोलते हैं फोन करके बुलाते हैं कि आप आइए साहब हमारे को ऑप्शंस बताइए कि
तो
पैसा डालना है इंडिया में
मैं बोला ना 300 लोग आए दुबई में वो इंडिया क्लब में था सेमिनार इट वाज फ्लडेड आई अदरवाइज आई गॉट ऑडियंस ऑफ 20 30 लेको तो ये कॉल पे 16 ही लोग आए आई थॉट 160 होंगे मे बी तूने टाइम गलत लिए है.
No, so we have invited the existing investors, those who
and then
either
I'm saying
invested in Motilal Oswal funds.
on a lighter note, but we need to these 16 people should get 160 people on a call. Then we talk again once again.
Yeah, sure. So we'll invite you again,
Yeah.
maybe after 2 months or 2.5 months down the line.
No, I'm very excited here. I'm really excited to get our Indians outside of India to come back to India at least financially.
Yeah, whatever money they've earned, they should invest back in India and make more money.
If not physically, at least financially come here. At least financially show your presence.
Yeah, correct. Well said, well said. Okay,
Good
Akhil,
guys,
thank
thank you
you.
so much. It was lovely talking, and Vikas is a lovely friend. So good luck to you, man. Take care.
I always learn from you, Akhil. Thank you so much.
Yeah, thank you.